Welcome to another Coffee with Samso, where we talk about projects with resource companies, CEOs, and trying to give some sort of concept to viewers. Today I've got David Reeves here with me from Calidus Resources Limited. They have the Warrawoona project, which they're trying to finalise to a mining stage. But Dave, why don't you just give us a brief about yourself and off we go.
Yeah, sure. So, as you say, Calidus, we listed back in June 2017. We'd pieced together some tenements out of Marble Bar, which had been mined in 1890s, and really it's sat idle since, mainly because it was owned by lots of separate little prospectors. So we tied that together in one continuous batch, started drilling. We took the resource, I think it was 300,000 or 400,000 ounces of inferred at the time in a couple of areas. That's now sitting at 1.5 million ounces. We've completed a bankable study just last week, and we've started construction. With the early works, roads, villages, power, water, communications starting to go in. So it is happening on site, and we've got preferred tenderers now, and all being equal, we'll be pouring gold, if not late next year, early the year after, for a new gold mine up in the Pilbara.
Okay. It's interesting, a lot of these companies, a bit like the Silver Lake, where they piece together all the sort of fragmented tenements and you built something from it. Look, the Pilbara is not sort of, from my experience, have been sort of an area where everyone says there's plenty of gold, but you can never get big chunks of it. Is that from your experience?
I think De Grey has shattered that experience.
Yeah.
And then if you look at the two gold mines, under construction at the moment, it's Capricorn, just south of Newman, and ourselves. So the Pilbara is, I think it's been a long forgotten part of gold in Western Australia. I actually worked up in the East Pilbara at a mine called Bamboo Creek back in 1990. And there was gold going on there, but it was very remote, it was very high cost. But with the iron ore boom, there's lots of infrastructures come in. Royalties for regions really added a huge amount of infrastructure to that area. And it's a very easy place to operate. You've got all that infrastructure from the iron ore and the engineering, the explosives, the energy component, all in the Pilbara, which you can leverage off. So that's opened it up. And it just hasn't seen a lot of exploration in the last 30 years. But obviously now, first it was a bit of the conglomerate rush, but this one with De Grey is real, and I think you're seeing the Pilbara start to get a lot more attention, which it does deserve.
Because it's not only yourself, right? You got the Kairos, with a lot of these guys have big numbers, resources. Artemis has Carlo, and it's not foreign to have these big resources, but it's just foreign for the market to say, hey, these guys are fantastic in the Pilbara. It's always been fantastic somewhere else. So have you seen that new market surge into this area for yourself?
Look, we're seeing a lot more interest from companies. You can't get ground. At the start, it used to be very easy to get ground and do deals. The price of ground and doing deals has gone up exponentially. So I think people who have ground up there realise that it is a lot more of interest. From an investor point of view, look, I think gold, be it in the Pilbara or the Goldfields, I don't mind as long as it makes money. And has a good story. So no, I think it's certainly been unloved, but it's not an impediment to be in the Pilbara at all.
When we spoke first time, I got in touch with yourself was about February this year, I think, at the RIU conference in Fremantle, and I guess the market sentiment then and the market sentiment now is dramatically poles apart in some ways. But in terms of the geology, I guess with the gold price, everything, how do you see it being a factor? Is it the fact that the gold price has gone up, or your geology is, you're learning a bit more and the structure's better in that sense?
A rising tide lifts all boats, and the gold price has been phenomenal. And you can see that just the amount of money that's raised into gold explorers and the success you get on a drill bit. So without a doubt, the gold price has been very useful for us. Specifically, it's just ticking boxes. The more you tick boxes and you meet timelines and you do what you say you're going to do, it builds investor confidence. And we've been through that Death Valley stage of feasibility where there's not a lot of news, and we're starting construction again. So we are keeping going with exploration to keep that news flow going. But if you look at any, Capricorn or WAF or any of these other guys that have recently gone into development, before you hit first gold, there is a re-rate along the way, and that's what we're sort of waiting for, because we think on any metric you look at us, we are, we've had a good little run recently, but we've still got a long way to go to get onto a par level with our peers.
It's interesting, like in the market like now today, I've been quite vocal in saying that where everything's sort of running, postage stamps are running. It sort of reminds me of the uranium boom, where one postage stamp was raising $10 million. And so I tell people it's probably time to get yourself to a point where you understand the likes of Calidus as opposed to XYZ, who's got a postage stamp, and sure, they've got a rise of 300% or 1,000%, but they're real, at the end of the day, still hasn't got anything. I mean, and then people will say, look at things, that's only 1.2 grams, or that's low grade, but at the end of the day, it's a total number of ounces that really matters, because that's the metal content, that's where the value is. And if the economics says you can achieve those ounces, if a lot of these guys out there don't quite understand that, how would you have that conversation with them?
So I look at it, there's a couple of ways of looking at it. Risk reward. So with us, maybe you go up a few fold initially once we get into production, which isn't a 10 bagger at all, but the downside risk is minimal because we've got that backing of 1.5 million ounces. We've got that backing of feasibility study. We will put that debt together. So the downside risk for us is very low, but still the upside risk, it's only maybe 2 or 3 times at the moment, the upside ability there for Warrawoona, but that's still a hell of a lot better than a bank, or anything else. 300%, you'd be very happy with that in any way. So that's one sort of aspect, I suppose, that people should consider when they look at investing. It is a hot market, there's no doubt about it, and you talk about ounces and what have you. I would look at the cash generation of a project, the IRR. If your project's going to cost $1 billion to build, to bring those ounces to production, it can be quite a hurdle. So I look at IRR, that's that rate of return, and we're paying all of our capital off. So what it costs to build that project, we'll pay it off in under a year at the current gold price. And everything after that is cash flow to the company. And that's because we've got quite a low all-in sustaining cost. So we're doing about just under 1,300 Aussie an ounce, and Aussie today is 26.50 or so. So there's a huge margin in there. And that again protects you on that downside risk if gold does fall for whatever reason. I personally don't see that, but there's a lot of margin in there to protect you. So I'd always look at the cash flow. I'd look at the company's market cap or enterprise value versus that cash flow, and there's various metrics to look at there. So for instance, if you're a multi-asset gold miner in Australia, you tend to trade on about 5-to-1 multiple. So take their earnings per year, times it by 5, that's their enterprise value. If you're a single asset company, times it by 3. So enterprise value, earnings per annum times by 3 is their market cap. So it's a very quick sort of metric that I use when I look at is someone overvalued or undervalued, and I look where we are, we're at 1-to-1, and that's why I say there's a few fold increase there once we get into production, and that's why we're focused on that. So look, there's no magic rule, and in a hot market things do go up very quickly, but they can also come down quickly. So if you want a bit of lower risk, that's where I think Calidus and companies like us have something to offer.
I think the market has sort of come off steam a little bit, And that's why I sort of been trying to reinforcing to the guys that sort of talk to me, and that you should start looking, understanding of what these guys do, the potential where they can go, and you know, at your market cap, I think it's 150 million. You know, what could it be if it's doubled that 300 million? Is it, maybe the metal contents could be worth billions, but surely the market cap should be, you know, twice, 3 times, as you say, right? But that's still significant in terms of your investment. Going forward, though, I mean, the people, they look at you, you've done this, you're getting contractors. What could be a deal breaker? What could just create you a lot of headaches going forward?
Look, from a technical aspect, we're there. From a financing aspect, we're pretty well there. That'll come out in the next quarter. The only thing I'd say is some sort of cataclysmic event, be it on a stock market or in Western Australia or what have you. You know, I think we're in the middle of a pandemic, which would normally be considered one of those events, and life is pretty much normal. Yeah, I don't see anything stopping us at all, really. I think. But
even with those, you're a gold miner.
Correct.
That's actually not a bad thing.
Yeah, I know. If that does happen, you know, gold's normally a good place. So you are sort of protected from any negativity in that regard. So yeah, look, I think we're pretty happy where we were 6 months ago in March.
Yeah.
I was a very nervous individual. We shut down drilling, we shut down everything, sat on our cash going, wow, what's this mean? Share price dropped out of the floor, you couldn't raise a cent on the AISC. And it's, you know, if you hit something like that, that becomes an issue. But we are, you know, once you're fully funded and you've pressed the button, which will happen in the next few months, and nothing's stopping you.
Yeah. I think since my conversation with Rick Rule and sort of understanding and obviously in my research, I hear what he's saying. Gold being insurance, in this time, I think it's, you know, no one's got a perfect crystal ball, but it's pretty strong case for it to go further higher, or at least stay in this range, as opposed to going down with all the stimulus that's been flowing around. In terms of timeline, you know, like you guys, obviously, you know, production on the way. What's upside? You know, I noticed that you've picked up another project, which is pretty good numbers.
Very good numbers.
And very close to where you are. So you could work that into your existing plant.
Yeah, so that's definitely the plan, and we'll put that out hopefully in the next quarter, showing people what that means. But Blue Spec is 220,000 ounces at 16 grams. I think the only higher grade resource I know of is Fosterville in Australia. Spectrum was slightly lower grade, slightly more ounces, and Ramelius bought that for 200 million alone. You know, think about that now. Market cap for everything, let alone Blue Spec, which we're acquiring, is 150. So just goes to show that value upside. So where we see this coming in, we've got a small little float plant on the side of our big CIL plant that does the conventional gold, and that's to do these small little high grade refractory deposits that do exist around. We've got one called Copenhagen, 6 grams. So we were building this little float plant just to put that through, produce a concentrate and sell it like you would a copper mine. And then it was just going to sit idle. So we saw this nearby. We've done a deal on it. Look, we need to do the studies, but you know, we're certainly envisaging sort of that 30, 40, 50,000 ounce per annum increase in production. If you assume similar costs, you know, that's worth 60 to 70 million earnings per year on top of what we're doing. So our feasibility was saying 110 million EBITDA, so that takes it to 170, 180 million EBITDA, 120, 130,000 ounce per annum. Yeah, everything just gets bigger and better, and the returns bigger and better. And I don't think the market has twigged to how value accretive that transaction is for us. And that's why we're pushing to get this scoping study out to show them, you know, show the market that it is a sensational acquisition, and it just adds so much cash to our profile. It's ridiculous.
Is it something you could expand in terms of the number of the ounces that you got there?
Yeah, so you know, that'll take us from 1.5 to 1.7 million initially. We've picked up ground ourselves along strike to the west a year ago. We were interested in this area because of that. Did that on the quiet. So we'll be looking at expanding those deposits both down dip and looking for repetitions along strike. So watch this space. We are interested in that area. We intend to do more in that area, and we intend to keep mine life and production up by exploring areas such as that, or Otways, which is a copper gold area we picked up recently as well in the area.
Yeah, in some ways, when we started the conversation about how the Pilbara was, forgotten and unloved, and I still think that the first person that has proper plant and proper infrastructure like what you've just described, it's going to reap a lot of rewards, because it is very hard to get up an operation like that, standalone. That story sort of from our conversation to me now is sort of clearer in the sense of what you could be, in a sense. And a lot of your neighbours who have those big numbers, you potentially could be talking to them in future, because it costs them too much to do a standalone. Maybe, take you guys.
Yeah, so look, there's in the East Pilbara, where we are, we'll be the only dominant mill there. So, and there's a lot of other deposits like Blue Speck around there that are known, let alone the ones that haven't been found. So once the mill's up and running, I wouldn't say the world's our oyster, but the East Pilbara is certainly our oyster, and we'll have a good go at it at that point. So yeah, look, I see Warrawoona being around for decades. The area is very well endowed. It's just a matter of ticking those boxes, getting in production, and using that cash flow to continue to grow.
In terms of I always at this point in time I like to give people sort of this way they can sort of if you had to sell to these guys, hey, buy my stock, why am I so good? What's your 5-minute pitch to these guys? I know you probably don't, but what if you did?
5-minute pitch, again, I just look at value proposition. I see it as a incredibly low risk, value accretive stock, in that as soon as we announce that funding in the next quarter, that's basically the last hurdle that we have, and therefore on any metric looking forward, the stock has to re-rate. It's just a matter of when. Is it going to be in the next few months? Is it going to be halfway on the way to production? Is it when we produce the first gold bar? I'm not sure, but it will. I'm absolutely dead certain it will re-rate. In line with that as well, we've got these other prospects we are exploring. We're putting together our budget for next year. We think the area is very well endowed, and it's just a matter of spending a bit of time getting to know the geology, and good things will come from that as well. You put those two together, and I just see it as I'd see it as a slam dunk, really. It has to happen. So again, it's not that 10-bagger. I don't see that happening in the short term, but certainly a very healthy return over the next 6 to 12 months if you're invested in Calidus.
Oh, look, I like the story, and especially now I think it's more important to get on track with these kind of stories as opposed to the postage stamps, because when things re-rate, stocks like yourself probably will recover much quicker, and you're going to production and you add the sources onto that, it becomes a very nice story, I think. Look, guys, if you like the story, feel free, definitely put a comment on, and I'm sure Dave will definitely reply. But look, Dave, thanks for giving us time. I think I love the story. I think there are few of these kind of stories that 150 million market cap, still fairly reasonable, cheap for punters, I think, and 2-3 times shouldn't be laughed at.
Certainly better than most super funds return, that's for sure.
Or the bank.
Or the bank.
All right, thank you.
Cheers,
and let's hopefully we'll follow the story.
Good on you.
All right.